Imagine if you had put $1,000 into Bitcoin 10 years ago. Today, that tiny investment would have grown to over $50,000. But what if you had put that money into stocks instead? Would you be richer or poorer? That's the big question. What makes you more money, Bitcoin or stocks? Well, to answer that question, you're going to need to know how stocks and cryptocurrencies work and the risks that come with investing in each. Without that kind of information, you're operating in the dark. I mean, it's not much different from gambling with your money.
Some people believe that Bitcoin is just a turbocharged version of the stock market. Other people think gold and Bitcoin are very similar because they have limited supply and demand drives prices.
Stock versus crypto. So first things first, you need to know that stocks and cryptocurrency are two completely different types of investments. Stocks represent ownership in a company, meaning real assets and cash flow support them. Think of yourself investing in something like Apple.
Asset is just a fancy finance term that means something useful or valuable that can be transferred between people or entities.
Meanwhile, cryptocurrencies are digital assets. Ever heard of Bitcoin or Ethereum? Yeah, when someone says cryptocurrencies, they're talking about those coins. Once you've got that basic difference down, the next thing you need to know is how these investments work. Well, when you invest in stocks, you own a small part of a business. If the company does well and makes more money, the stock price goes up. The stock's value is tied to the company's success. The company does well, you make money. If the company doesn't do well, you don't make money. Simple, right? Cryptocurrency, on the other hand, is a whole different playing field. It's not tied to real-world assets, meaning it's not a physical business. Its value is based on what people think it's worth. Prices can skyrocket or crash overnight just because of market hype or fear. To make money with crypto, you need someone to buy it from you for more than you paid. With that out of the way, it's time to move on to the big elephant in the room. Which investment options bring in more bucks? Well, to answer that question, we got to look at different things. First, we got to look at how both investment options have performed over the years. Bitcoin has had a wild ride since it was created in 2009. In the early days, it grew super fast, sometimes doubling in value every year. But as time went on, its growth slowed down a bit, and it became really unpredictable. Some years, like 2022, it lost 65% of its value, but in 2023, it skyrocketed by 156%. On the other hand, the stock market, especially the S&P 500, is like the steady and reliable older sibling. It doesn't grow as fast as Bitcoin, but it has been making people money for a long time, averaging about 10% growth per year. In 2022, it dropped by 20%, but in 2023, it had a great year with a 25% return.
And just to put that into perspective, Dogecoin, a useless piece of code with a dog logo, created as a joke, has a higher market cap now than Rolls-Royce, Hilton Worldwide, General Motors, Mercedes-Benz, Target, BNY Mellon, Porsche, Volvo, Freddie Mac, Marathon Petroleum, Barclays, BMW, Ford, Electronic Arts, DHL, Delta Airlines. Dogecoin and other memes like Shiba Inu and Pepe have higher market caps than airline, automobile, and big tech companies.
The S&P 500 is a stock market index tracking the stock performance of 500 of the largest companies listed on stock exchanges in the United States. So what does it mean? Well, when it comes to risk, crypto and stocks are like a wild roller coaster versus a smooth train ride. Bitcoin and other cryptocurrencies are famous for their crazy price swings. You saw the big up and down in prices a few seconds ago. That means if you invest in crypto, you have to be ready for big ups and downs. It's risky, but it could also mean big rewards. Stocks, on the other hand, are usually much more stable, especially if you invest in big companies or funds like the S&P 500. Sure, stock prices go up and down too, but they don't usually skyrocket or crash overnight like crypto. In fact, with time, stocks tend to grow steadily, making them a safer option for long-term investors who don't want to lose sleep over sudden market swings.
During this time, the stock price times total shares equaling a company's value was less arbitrary. However, Now companies' dividend payout ratios, as well as companies that distribute a percentage of their earnings to shareholders, have decreased substantially since the 1950s.
But you can't make your decision based on risk alone. You need to look at other things as well, like liquidity, accessibility, and growth potential. If you want to invest, both stocks and crypto are pretty easy to buy, but they work a little differently. Stocks are available on brokerage platforms, and you can trade them during regular market hours. It's a structured system with rules to keep things running smoothly. Crypto, on the other hand, never sleeps. You can buy and sell it 24/7 on different exchanges, giving you more flexibility. But here's the catch. Since crypto markets aren't as regulated as stocks, there's a higher risk of scams or sudden price crashes. Of course, you can also look at it this way. Fewer rules means lower fees.
Right now, if you bought $100 of Ethereum today, in 2 years it turned to $800. And that's what, like, literally one of the two blue chips, Bitcoin and Ethereum, you know? That's the kind of money you can make versus in the stock market, right? You put $100 in the stock market, it'll take you 7 years before you double it.
Wow.
So 8 times in 2 years or a 2x in 7.
And then there's the fact that stocks have been around forever, and they've proven to be a solid way to build wealth. There are all kinds of options, from giant companies like Apple to smaller, fast-growing startups. Crypto, though, it's still new and constantly changing. New technologies and uses for crypto are always popping up, making it exciting for long-term investors who are willing to take the risk. And honestly, for first-time investors, that may sound like a big risk, but don't look at it like that. An increasing interest in cryptocurrencies can mean good things as well. I mean, Tesla holds Bitcoin on its balance sheet. In fact, the company even accepted the digital currency as payment before. And let's not forget, new coins are being introduced into the market every day. Years ago, Bitcoin was the biggest contender, but now there are thousands to choose from. So there is a market for cryptocurrencies. They don't call it digital gold for nothing. However, the thing to remember is that interest can disappear overnight. And if that happens, you're left with nothing, since crypto isn't a physical asset. Hard chance of that happening, but still something to keep in mind.
That's the difference between stocks and crypto. To keep it easy, step one, make sense of the data. People don't realize sometimes when you move crypto, that results in a capital gain or loss. Stocks is just purely like spot trading. If you buy it, you sell it, there's a gain or a loss. Crypto is you buy it, it goes up, you don't do anything, so you don't realize anything. But then you maybe swap some ETH for whatever. And that swap is considered a taxable event. So you don't even think about these things when you're doing them, but you may be incurring gains or losses throughout the life of these transactions.
So as a first-time investor, which option do you choose? Well, instead of choosing between stocks and crypto, why not have both? A balanced approach can help reduce risk while still allowing you to take advantage of crypto's growth potential. Think of stocks as your solid, steady foundation, while crypto is the exciting wild card that could bring big reward. You could put most of your money into stocks for stability and then set aside a smaller portion for crypto just in case it takes off. This way, you get the best of both worlds: long-term security with stocks and the chance for high returns with crypto. Besides, all the veterans talk about not putting your eggs in one basket as well.
There are two main drivers, and they can go up or down, and the markets reflect those things. What are they? Inflation and growth. Inflation can rise or fall, and growth can rise and fall. And if you can have a balanced portfolio of those, like 25% of your risk in each one of the portfolios that would do well if that happened, then you're going to have an element of diversification so that you're not exposed to one scenario.
You also need to think about when you need the money. If you need it soon, like in a year or two, you should stick to safer investments. The last thing you want is to see your money disappear because of sudden market swings right before you need it. Riskier investments like crypto are better suited for those who can wait. According to experts, first-time investors should give stocks at least 3 years to bounce back from any losses. The longer you can keep your money invested, the better chance you have to ride out the ups and downs, and come out ahead in the long run. Most importantly, remember to invest based on your needs and financial goals. If you're going to follow trends, you'll beat yourself up about it later on. At the end of the day, stocks offer stability, while crypto offers exponential growth. The choice between them depends on your investment goals and risk tolerance. Whether you're a seasoned investor or just starting, understanding the differences between these asset classes can help you build a more robust financial future. So, what's your strategy? Are you more into crypto or stocks? Let us know in the comment section below. Until next time.